Battery production is crucial for Tesla's growth. It's often overlooked, but that's the importance of the Gigafactory. Remember, they've got a European Gigafactory, which is also battery production, in addition to vehicle production. That's expected to come online next year. And one last thing, guys. Elon's calls are always interesting. They start with retail investors asking questions, submitting questions, and then they go to the analysts from Wall Street, to which Elon said, you know what? Those retail investors had some pretty good questions.
I do think that a lot of the retail investors actually have deeper and more accurate insights than many of the big institutional investors, and certainly better insights than many of the analysts.
Not a surprise that Elon Musk said that. Look, he has sparred from time to time with analysts on Wall Street. He believes that there are some who just don't get it, don't understand Tesla to the degree that they should, and underappreciate the company. So he gave a tip of the hat, guys, to Tesla's retail investors, saying they sometimes have more insight.
Oh, my word. The guy said, sometimes we know what we're talking about. Oh, my word. Nah. All the time, fam. We know what we're talking about.
I do think that a lot of the retail investors actually have deeper and more accurate insights than many of the big institutional investors, and certainly better insights than many of the analysts.
Than those on Wall Street.
Hello everyone, my name is Kaseem. Welcome to the channel. So in today's video, we are going to talk about Tesla. We are going to do the breakdown of the Q3 2021 earnings call. This is the third series, so go and watch the previous two. I'm going to leave it in the cards so you can catch up to this point. And the whole point of this segment is to just break down the earnings call. It's very important to listen to earnings calls of your favorite companies, the companies that you have conviction on, that this company is doing great things and I believe in what they're doing. You have to listen to what the teams are doing, the management team. So that way, if you agree, you can still keep your money in there. Or if you don't, you take your money out. I mean, this is no investment advice. I'm just doing this for me. This is what I do. So in the process of me doing what I do, I bring content to you guys, which for me, my main goal is to show you guys how I'm going to get to $1 million in investment assets. So, you know, that is the main point of the channel, $1 Million Challenge, Kaseem Bada. So anyway, so we are going to get into Tesla's Q3 earnings call. So, you know, let's get right into it. So here we are. This is the earnings call. We're going to get right back into it and basically listen to what the team have to say. I'm going to add some commentary where I think I need to add some commentary. So let's get right into it.
Thank you very much. The next question is, service remains an issue with appointments available weeks or even months out. Likewise, supercharger wait times have become untenable at some locations. What concrete steps is Tesla taking to improve the customer experience in these two key areas?
Good question.
Yeah, I'll take the service part of this question. Drew, you can take the supercharging part. We have seen an increase in service wait times throughout the summer. And there's a couple of things that have contributed to that based upon the information that we have. The first is that, and I think this is kind of not unique to us, is that the return to some sense of normalcy in a post-pandemic world has happened, I think, more quickly than most people expected. And what we're seeing here is that the number of miles that people are driving has increased. There may have been some demand for service during 2020 or in the early parts of 2021 that customers put off. And so there's a bit of a catch-up that's occurring that has increased demand for service. At the same time, in the macro environment here, logistics, moving parts, sourcing parts has become increasingly more difficult, which is a well-known issue in the world right now, as well as challenges in the labor market. And so there's kind of this simultaneous increase in demand for service where the ability to supply that service has been impacted for the reasons I mentioned.
Sure.
And so, we saw an uptick primarily in Europe and North America in service wait times over the course of the summer. And we've been working extremely hard since then to address this. And we've seen our wait times come down. So this is not the case in every location, but if you think about it from regional average perspectives, we are seeing improvements there. We remain super focused on adding locations. And so over the last year, we've grown our physical footprint of service centers by 35%. We've grown our footprint of mobile repair by over 40%.
Cool.
We're also adding staffing as quickly as we can in the areas that are most impacted by the imbalance of supply and demand for service. But I think the most important part about all of this is, and we've said this on calls before, where the best service is no service. And so we have been incredibly focused.
That means the best service is no service. What Elon and Tesla, what they mean by that is making sure that the product is so good that you don't ever have to do things to it. You don't ever have to fix it. You don't ever have to do anything. You just do basic stuff. Maybe pour washer fluid for your windshield. You don't even have to change the brakes. There's no engine, like you just want to make sure the car works. So there's no service that will be needed. But obviously they will still need to have all this, their mobile service that come out and drive to you and fix your car. They need to have all these things in place. So all these things just take a little bit of time to work through.
As a company, both on the initial quality of our vehicles and reliability of our vehicles. And we've seen pretty substantial improvements in both of those metrics over the long term and over the last couple of quarters. So it is something that remains on our minds. We monitor this very closely, but hopefully that's a helpful explanation into the context and what we're doing.
Sure. It's a good one.
Yeah, and on the supercharger side, the supercharging team monitors congestion and plans expansion to ensure customer experience with minimal wait times, alongside the growth in our vehicle fleet.
One thing that you guys have to remember is Tesla just basically opened up their supercharging, and you have to think about the supercharging as gas stations. Okay, this company single-handedly owns most gas stations when it comes to EV. Can you imagine you investing into a company that owns all the gas stations? I know there's Shell, but a company that is Shell, Chevron, Amco, all the gas station that you see, the future gas station, this company owns it and they keep building more. Another big reasons why this is a good investment for me.
In expanding capacity in some congested areas, average congestion on the network has decreased over the past 18 months.
Sure.
Nonetheless, we're not standing still. We are executing accelerating expansion plans globally. The network has doubled in the last 18 months, and we're planning to triple it over the next 2 years.
Nice. Triple the gas stations for the future EV. Mind you, Tesla just recently opened up their charging station to other vehicles. So all you just need to get is adapter, and you're able to charge your car, supercharging location, even if your car is not Tesla. So that's a plus. That would be something that will be bringing in more money for Tesla.
And even so, on an individual site basis, to combat existing congestion more quickly where it is isolated and problematic, we expedite local relief sites, deploy mobile superchargers, and we try to introduce pricing strategies that encourage more off-peak usage to avoid the waiting.
Thank you very much.
Just one thing to add on supercharging.
Cool.
If you haven't experienced our latest iteration of battery packs that can handle fast charge rates in combination with our 250 kilowatt charging stations, is pretty incredible. And this is a really important component to supercharging capacity, because the faster you can charge, the more charge sessions that you can have on an individual post, the better the customer experience is as you're going on a long-term journey, because your supercharging times are lower. So this is a really important part of the strategy. Supercharging team has done a great job rolling these out. but it requires a combination of both the 250 kilowatt charging and our latest iteration of battery packs.
And we've also maintained an ongoing roadmap on software improvements, dynamic routing to avoid busy superchargers. That's actually really helpful. We take the real-time busyness of the stations into account when choosing where to navigate people on their road trip. And beyond that, we're also continuing to improve the trip planner itself and how it estimates how much energy people use, so it's not too conservative and asking people to charge more than they need to, which is another thing that can delay a total trip.
Great, thank you very much. The next question is Tesla considering any other ideas other than FSD with real-world AI that can bring additional software revenue to Tesla? If not, can Tesla consider building interesting games around FSD beta?
Interesting games.
Sure. At AI Day, we did talk about a potential future where Dojo could be used as a neural net training platform for other companies.
Sure.
It's not a focus of ours today, as we're fully subscribed on Dojo with our internal uses.
Sure.
We do expect to continue to improve the in-car experience in the context of FSD.
Sure.
Great, thank you. And maybe last question from shareholders is, how has FSD take rate changed since the introduction of monthly subscription? Are there any plans to increase the FSD pricing as wider release becomes imminent?
This question is stupid because the company is always saying that they don't want to tell people how they are doing their pricing and all these things, because those are like internal stuff that give them an edge. Okay, why do you want to tell your competitors how you're managing your business or on all these things? This is a very stupid question.
I'll take the second part of the question first. We won't be providing any kind of forward-looking commentary on our pricing strategy.
I figured that's what they're gonna do. I figured that's what it's gonna say, because it would be very dumb for you to tell, hey, this is exactly what we're gonna do with this our new product that nobody even know. A lot of people don't even understand how FSD and the pricing and everything, how it's going to be. Even to be honest, Tesla is still trying to figure it out because FSD is not fully out there for everybody yet. And FSD is called full self-driving. It's not fully out there for everybody yet. It's not even full self-driving yet. So they cannot be they cannot give you a definite, we're going to charge $200 every month for it. Because they themselves don't know if it's worth $200, if they need to charge more, if they need to charge less, What
may happen here over the near term. With respect to the first part of the question, this has been an interesting thing for us to unpack within the company. I mean, what I'll say just as a general statement before I make a couple of specific comments is that, the things that we learn on FSD subscription today are not necessarily all that relevant.
Okay.
This is really more of a platform for when FSD beta goes into wide release, and the features and functionality become more accessible to more customers. Yeah. The second thing that I'll note is that if you look at the pricing, the monthly pricing of FSD subscription, and then you compare that to the cost of either rolling FSD option into your lease or your loan, on a monthly basis, the most economical way for a customer to enjoy the features of full self-driving is through purchasing it up front and rolling it through their financing.
Cool.
And
it makes sense. It makes sense because if you're going to own it anyways, if you want your car to drive yourself, you might as well just buy it. There's nothing that you pay monthly. There's nothing that you pay for monthly that really benefits you for the long run. You at the end of the day, you'll end up going to pay more because you're going to pay either more interest or this or that. So if you're paying monthly for it, let's say, for example, the FSD costs like $20,000, right? And you don't want to pay the $20,000 and it don't cost $20,000, it costs $10,000 right now. Let's say the actual price is $10,000, which it is. So instead of basically saying, hey, I don't want to pay the $10,000, I will just pay it monthly. Well, if you're paying $200 every month, you're paying $1,200 every year. And like within the space of 10 years or 10 years or so, that's when it will take you to pay it off. Instead of just rolling that, paying the 10 grand, put it into your payment and pay it off in 5 years and you'll be good. Because in 10 years, you'll probably end up paying more, you know? So it makes sense to just buy it off the bat.
As a result of that, what we've seen in the data is we're unable to detect a change in the upfront take rate of FSD when people purchase cars. We have seen quite a bit of activity of folks curious to experience what the software has to offer and subscribing to it and enjoying it through that route. But again, as I said at the beginning, you know, I think what we've seen so far on FSD subscription is not terribly relevant. You know, we'll see how that plays out in the future as we continue to release more features.
Thank you very much. And now let's go to analyst questions. I just wanted to remind everyone to click on raise hand button if you want to ask a question. The next question comes from Pierre Ferragu from New Street Research.
I think what I'm going to do is I'm going to end this section here. I want the analyst section to just purely have their own. Because the first part was just questions from retail investors. So we're going to end this section here. So I hope you've enjoyed that section there. A lot of great information got covered. Questions about FSD, Dojo as a service. A lot of great information got covered there. So if you like this content, again, consider subscribing to the channel, like the video. It helps me out. That's how you help me out. Appreciate the love. Until next time, I will see you later. Love you all.